Hello and welcome again to Stocks Advisor. Today we will talk about Luckin Coffee Incorporated, ticker name LKNCY. And actually this is very interesting pattern because it's wide today. We finished with 5.97% with a market capitalization less than 1 billion, so 808 millions. This company is seen to have really volatile moves upwards and downwards through the last actually half a year, ranging from, let's say, up to from 2 to 15, and of course very attractive for those who would like to make quick money here. But also you need to be very careful and knowing what you do, because here news and some actions can be really severe and cause severe change of the price. So let's do our quick analysis here to understand what's happening and how to trade. You can see that after having some period of correction, let's say, that was taking place here all the way from actually mid of April to mid of May, we see now that this was pierced and we are classically going to upwards. But there is a very strong resist level formed previously, so we need to keep it in mind and appreciate. Let's make it red here, and we can give it a name R1. So this level will be the, let's say, initial price target, although it's quite high, and actually this will allow us to make a profit here from 10 to 15%, and this will be our daily profit taking advice, 10 to 15%. Because this is very volatile, but once you have it, just take it, don't hesitate, and actually if needed, exit and re-enter again. So with this being said, these are, let's say, the current situation. For the company, it's turning to so-called stable growth regime. What does it mean? The stable growth regime is the regime when you have the price on top, then you have your moving average 20 working as a support level for the price, and then you have moving average 20 and 200. Once this is the case, and until this is the case, company is stably growing. And you can see we're about to form this because all three moving averages are about to grow. Moving average 20 is trying to go higher. They are still volatiling 20 and 50 around each other. But once we definitely pierce R1 level, this will be the pattern. But it might come a bit later. It might take a little bit, let's say 1-2 months still. So this is for midterm target. But for now, we can just play on those volatilities. Also answering the question how volatilities, of course, we need to mitigate all risks. And first of all, what is important to know that MACD histogram is showing extended long wave. Still might go a little bit higher, but R1 could be really a strong resist. And then actually what might be happening here, once this histogram starts for let's say for decline, we could see quite significant decline of the price as well, as I said. Also RSI wise, we are about to go to overbought area. Again, this might still mean that we will go to R1, but also correction of this upwards wave could be seen, and we need to be preparing ourselves for this in order not to take long-term losses. So this level and actually this triangle between R1 and this dark line might resolve a little bit lower, and then we can again start growing with the company. Therefore, let's look at the levels, how to trade here. So first of all, hoping for immediate growth towards R1, we can still buy within the current limit, let's say within the this very narrow level today and the previous days. This would be between 781 and actually 815. This will be our primary level, quite narrow though, but still it is what it is. So let's write it down in the form of call out for ourselves. So 781 and 815. To those levels and how to trade there, we will talk at the end of this video. So this will be the first level with the price target R1, let's say, and the profit 10 to 15% for this company. Again, sorry, if we have immediate decline further, this is also possible. We could go lower, and then we need to be prepared to buy at the secondary technical level here, which is very nice that moving average 2050 will work both as a very strong supports for us, and actually moving average 200 will work also as a very strong trend definer. Therefore, let's say the second level through will be here, and the top of it will be formed by this consolidation level that was formed by end of May, and actually moving average 20, which will be there by that time, and also the level where the breakage, the beginning of taking off started when on the descending channel that was seen, that is drawn here as a dark gray. So with this being said, these are two levels, 673 and 732. Still quite strong line, but again not really strongest, because still there is some news that could be coming, and we know that company is really sensitive to those. Also, it is important to know that these two levels are very close to each other, the primary and secondary one. Therefore, if any bad news comes, we need to really take into account possibilities and be lower the very principal levels, which would be in this case actually with the bottom on here and with the top on here. And the reason for this is also that moving average 200 will be high, so it will create extremely strong upwards pressure if we go here. It's not at all that we say we go there, but as always we want to keep some significant funds to buy at the very principal low level, which might take place. In this case it will be 492, 670, 567 before taking profit, because we don't talk about stop loss strategies here, and we don't trade on 15-minute candles. We trade with daily candles with the principal levels and non-linear averaging down. So our philosophy is that it's okay to wait a little bit longer, but we still want to exit with profit and actually or with a draw in the worst case scenario. So this is very strong profit versus loss optimization, and that's our opinion. So if you like to follow it, you are free to do so. And if you like this way of trading with, let's say, strong risk mitigations, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos like that where we discuss these strategies. And the last thing, talking on how we buy through, and today all 3 videos about reversive moves, confirmed reversals, and a little bit different way of non-linear averaging down. Usually we advise 5 portions, but here we always advise in this kind of pattern 6 portions play. What does it mean? It means that the funds you would like to play here, you might split in 6 portions. Then you can buy with 1 in the first level. If the second level, you can buy with 2 portions, and if there is any negative catalyst or whatsoever, we go to the third level, you can buy with remaining 3 portions. This way it will be the best optimization of profit versus loss. And again, whenever you can take profit of 10 to 15% from the all money allocated in the position, take it. This is strong advice opinion, because never wait too long. If you want to become successful trader, you cannot become one from one trade. You cannot become millionaire or billionaire whatsoever from one trade, but you can lose all your money with one trade. This is very important to remember. So take in time, enjoy your profit, re-enter. Learn how to do it again and again. This is the only recipe to become successful trader. So if you agree with this statement, again, and you agree with this way of trading, this way of risk mitigation, follow us. We discuss many stocks daily, and also, by the way, older videos are still fresh, because situations discussed there, especially if we are talking about second and third levels, still might be happening, and then you will be just in time to buy there as well and to make your quick profit. So with this being said, good luck with this one. Check out the videos, also very interesting. Today we did FUBO and CCIV. And don't forget to subscribe to our channel. See you at another episode of Stocks Advisor channel.